Ladies and gentlemen, digital investors, welcome back to another video where we go over everything that is going on inside of the cryptocurrency space. The market is rising. People are getting very excited about everything that is going on. And we also have some pretty crazy news coming out that we are going to cover today. So if you guys are frequent viewers of the show and you would like to show some support, tap the like button. It helps a ton to push this video out further in the YouTube algorithm. Also, make sure if you haven't already, go subscribe to my clip channel. It is the first link in the description of this video. And what we do here is I take the most important segments of my main videos, just like the video you're watching right now. I take those most important segments, I clip them, and I upload them here. So if you like short, to the point videos on specific cryptocurrency topics, this channel will be literally perfect for you. And if you guys could also help me get to 500 subscribers, that would be greatly appreciated. With that said, guys, I don't want to waste any of your time today. We have a lot of great things to go over, so we are going to get into it. We have Raoul Pal, the macro guru, talking about the entire cryptocurrency market about to explode and double its current size. Now, for most of us here, we're still pretty early, and I think most of us think that's possible, right? I think, having your portfolio go up an additional 100% from here, I think most people are expecting that. And really cool to see Raoul Pal kind of reinforce this idea. So let's see what he says. The digital asset space breaking the $1.8 trillion market cap level signifies the beginning of a new surge that will catapult the crypto markets to greater heights in the subsequent months. That is what his tweet says. He says, my guess is the whole space doubles in the next 2 to 3 months. Let's see. So think about that, guys. The whole space doubling in the next 2 to 3 months. Think about how long it would take for your capital to return in the stock market. And we have some professional analysts predicting that in just the next 2 to 3 months, right? That is 60 to 90 days. We could double our money. That is pretty insane, right? What other market, what other asset class could you go into and actually expect returns like this? Paul said that a wall of money is coming in once Bitcoin hits the $1 trillion market cap. So we know we've hit that. And also notice, it took us so long to hit a $1 trillion market cap, right? It took us years. And now look at how quickly we have gone from 1 trillion to 1.8 trillion, 2 trillion market cap, right? Very quickly. It didn't take us another number of years to double. So that is pretty insane. He says, what we're seeing is front running the size of the market cap because at 1 trillion comes a serious asset. At $10 trillion, it's gold in terms of asset size. So that deepens, it makes a broader market and allows more participants into it. For institutions, it is what is the adoption? What is the regulation? What is the market cap? So the more it goes up, the more the market cap makes it available for them to purchase. So that is a much bigger deal than price. Okay, so he's basically showing that for institutions, them coming into Bitcoin in this cryptocurrency asset class, they are more so looking at market cap than price. Because if there is enough money overall inside of an asset, then you know it has staying power. Price is a function of that growing market cap. But if you're BlackRock, you would not have looked at it until it got to this, near the $1 trillion market cap. And that's the thing. And as we know, we have passed that $1 trillion market cap. Really awesome stuff. That's what Paul says. Let me know what you guys think. Do you guys think we will be doubling in the next 2 to 3 months? Do you think we'll be going down, having a correction, or do you think we will far exceed a doubling within the next 2 to 3 months? Also, scrolling through Twitter, I came across this from Gold Telegraph. They say, breaking news, China's central bank has put its Virtual Wan through a new set of paces by allowing select Hong Kong residents to use it to make payments across borders. So I went to their source, and this is pretty interesting. China's central bank is allowing select Hong Kong residents to use the Virtual Wan to make payments across borders, state media reported Thursday. Under a one-day pilot program, Hong Kong residents could use the central bank-developed digital currency, basically like a CBDC, to pay for things in the neighboring city of Shenzhen, across the border between the Special Administrative Region and South China's Guangdong province. The trial highlights the People's Bank of China's interest in expanding the testing of its digital currency, which has so far been limited to retail payments on the Chinese mainland. Hong Kong residents who regularly travel to Shenzhen can register a digital wallet with a daily transaction limit of up to 50,000 won after verifying their identity with their mainland travel permit. Hong Kongers who occasionally visit Shenzhen and do not have a mainland travel permit can use their Hong Kong phone number to open a digital wallet that allows anonymous payments up to a smaller total. So that's pretty interesting, right? With just a phone number, they can open up a digital wallet and start doing anonymous payments. Now, I'm not sure how anonymous that would be since your wallet's going to be tied to your phone number, right? So anonymous might be the wrong word there, or maybe I'm just misunderstanding a little bit. Over the next few years, policymakers plan to expand testing of the digital yuan in several regions. The PBOC's Digital Currency Research Institute joined HKMA's Digital Currency Research Project to facilitate cross-border payments at the wholesale level and solve problems associated with cross-border fund transfers, including inefficiencies, high costs, and complex regulatory compliance. Wow, yeah, China is making some waves in terms of their adoption of digital currencies, right? They're definitely ahead of the game. So that's what we have going on in China. Let me know what you guys think of that below. I also came across this. George Soros, CIO, says Bitcoin is taking a buyer base away from gold. And this is really interesting because this is kind of the narrative that we are seeing, right? Is that, hey, people are leaving gold and precious metals and they are coming into cryptocurrency. So Dawn Fitzpatrick of the Soros Fund Management revealed that the fund was invested in the crypto space. She says, we think the whole infrastructure around crypto is really interesting, and we've been making some investments into that infrastructure, and we think that it is at an inflection point. I'd say it's everything from exchanges, asset managers, custodians, to the mundane tax reporting on your crypto gains and everything in between. We think that's interesting. So when it comes to crypto, I think we're at a really important moment in time, and that something like Bitcoin might have stayed a fringe asset, but for the fact that over the last 12 months, we've increased the money supply in the US by 25%, there's a real fear of debasing of fiat currency. So that's pretty interesting, right? That is something that we have covered on this channel quite a bit, where a lot of times when we look at institutions like this, right, whether it be big hedge funds, institutions, or companies, and we look at the reason, of why are they coming into Bitcoin, we generally see the same consensus of them saying because of how the money supply is expanding at the rate at which the Fed is printing, and because of fears of inflation and everything like that, that is why they are starting to see the need and the value of Bitcoin. They are really clinging to that digital store of value narrative. So it's really interesting. We'd have, add another one of these huge funds to the list that is basically preaching that same narrative, expanding the money supply, and now they are seeing, the debasement of fiat currencies. Now they're seeing the need for an asset like Bitcoin. She says it's a commodity that's easily storable, it's easily transferable. The IRS classifies it as a physical asset. It has a finite amount of supply, and that supply halves every 4 years. So I think it's interesting, right? They're seeing, hey, as the dollar is printed every year, Bitcoin, the supply is reducing every year. They are literally seeing an asset class with a deflation built into it. And while they're sitting on US dollars that are inflating, it's a no-brainer to move into an asset that is deflating, and we have 12 years of history on Bitcoin that shows the amazing gains that people are getting and the amazing gains that people are continuing to get, right? In real time right now, we are in a bull market. People are making amazing gains on Bitcoin. She says, I think when you look at gold price action in the context of a fairly robust inflation narrative of late, it's struggled getting traction, and I think that's because Bitcoin is taking some of its buyer base away. So interesting concept nonetheless, right? They say gold is stagnating, not really doing much because possibly Bitcoin could be taking away the gold's buyer base. I'm not sure. I don't really know if I have an opinion on that. I think gold is going to have its time. Maybe right now Bitcoin is stealing the show. Maybe once the Bitcoin bubble pops, right? Once we end this bull market, we have our blow off top, and we go into our next bear market, maybe that is when gold will start to go. Not sure. You guys also know I'm not a trader. I don't like predicting things like that. So yeah, anyways, interesting stuff. Let me know what you guys think down below though. What do you think between the, the synergy, the relationship between gold and Bitcoin that we see going on right now? This is also pretty interesting. Central bank money drops with digital currencies could fuel inflation. This is from a Bank of America report. So CBDCs could potentially facilitate powerful, directed money drops. Money drops, that's interesting, right? They say, and raise inflation expectations, according to a March 31st report by BOA. CBDCs could boost the future transmission of monetary and fiscal stimulus. All right, that's really interesting now. The analysis might show how countries' adoption of CBDCs might indirectly create extra demand for the largest crypto as an investment hedge against inflation. They're talking about Bitcoin. The BOA report titled Digital Love, Central Bank Digital Currencies explained the benefits of CBDCs, including the potential to increase the speed of domestic and international payment systems while lowering costs. Those advantages can make it easier for governments and central banks to distribute stimulus money. Boom. The stimulus probably isn't going to stop, guys. Stimulus is probably going to keep going. CBDCs represent the next frontier for central bank stimulus, potentially acting as a potent conduit for policies such as stimulus checks, emergency lending programs, UBI, Universal Basic Income, inducing a more powerful directed money drop, right? What are these money drops, right? The evolution of central bank digital currencies is likely to increase inflation expectations, boosting the case for inflation assets in the 2020s. Another point, we're not going to go over all the points, but we'll go over the ones that are most interesting, to say the least. They say CBDCs could also speed the delivery of directed stimulus or helicopter drops. For example, many of the Fed's recent pandemic credit programs were hampered by legal and logistical issues. I love how they're literally just calling it money drops, helicopter drops. Like, yeah, the Fed is just, they're just turning that wheel, baby. Print, debase the dollar into absolutely nothing till it's worthless. They say the existence of a CBDC would likely have allowed simpler designs and facilitated the targeted extension of credit. In cooperation with fiscal authorities, stimulus could be surgically tailored, in contrast to broad fiscal measures like the recent $1,400 stimulus checks issued by the U.S. Treasury. Governments could credit smaller amounts to specific populations or industries to achieve their policy aims. And they have one thing here. They say, however, the report also lists potential drawbacks. Governments could obtain access to private individual spending data. Yeah, obviously, right? When we're all going on the blockchain, that's everything's on the open, right? Every transaction is right there. Anyways, guys, some really interesting stuff, especially when remember a couple of years ago, some of you guys may be new to the space, so you might not know about this, but this came out a few years ago, how the government's new real-time payment system could transform commerce. This is the Federal Reserve, right? This was a few years ago again. They unveiled new details about FedNow service. The FedNow service is a real-time payments platform that would enable financial institutions in the U.S. to clear and settle transactions in virtually instantaneous fashion. And now we have Bank of America unleashing a report basically making that same case, and we know the Federal Reserve has prepared for this. They have the FedNow service, okay? So everything that we see is just an illusion. All of this stuff is already in place. Let's move on to some other stuff. We have Cardano. Hoskinson outlines roadmap for infrastructure and governance decentralization. Remember, if you guys are enjoying the video, tapping the like button helps me a ton. And if you guys could also subscribe if you're enjoying the video, that would be greatly appreciated. We're trying to get to 20,000 subscribers. So Charles Hoskinson celebrated Cardano's entry into a new era of decentralization with D equals 0. The Shelley hybrid era is finally past, as the stake pool operators are now responsible for the production of 100% of all blocks. We covered this a few days ago. Basically, Cardano is now fully decentralized because IOHK, the parent company of Cardano, is no longer producing blocks. It is all being done by stake pool operators. So Charles Hoskinson says, by all means, this was the big one. This means no more training wheels, no more fallbacks. There is no group of people watching. That is, the whole network is completely in the hands of the stake pool operators, and they have proven that they can do a better job than the BFT nodes. At that point, the whole infrastructure is decentralized. There's no custodial paper, nobody floating. We're better than Bitcoin in every measurable sense, but there's still a question, and it's a question about social dynamics. After the great decentralization of infrastructure will come the decentralization of governance. In Hoskinson's view, the Cardano community is best positioned to achieve this accomplishment that other cryptocurrencies have failed to achieve. Hoskinson says that this protocol has become a family. I firmly believe that we will continue to grow and that this movement will become the financial operating system of the world that will allow countries, it will allow the rich and poor to work together to actually create a world that is just. Awesome stuff for Cardano. Now, we're also going to go over this regarding Cardano, where Charles Hoskinson explains why Africa will leapfrog the rest of the world in blockchain adoption. I thought this was super interesting. And if you're trying to see, why is Cardano putting time and resources in the places that they are putting them, this will give you some great insights into that. So Charles said that the Cardano ecosystem would benefit greatly from Africa's accelerating infrastructure development. By implementing a blockchain backbone, Hoskinson Hoskinson sees the continent leapfrogging other nations in the coming decade. Hoskinson said that the region represents a promising prospect, especially now in 2021, which wasn't the case 10 years ago and before. Africa is rising in terms of technological development. First is the expansion of internet infrastructure in the region, and more importantly, the rate at which internet adoption is occurring. Hoskinson spoke about how this fits with a younger demographic of digital natives who are tech savvy, as well as a younger, more in-tune leadership that's cognizant of blockchain's technology's potential benefits. He says if you look at Starlink, if you look at the rate of people coming online, if you look at the demographics of the governments, it used to be all the leaders were in their 70s to 80s, and they were kind of leftovers from bad eras. Now they are younger. They are in their 40s and 50s, and they are Western educated. He gives the example of Pakistan's phone network. I thought this was a pretty interesting example. He said officials in that country did not go down the copper cable route. Instead, Pakistan jumped straight to 4G towers. This gave better coverage at a fraction of the cost and reduced installation time. Much the same is happening in Africa right now, but concerning blockchain tech. In the next 5 to 10 years, all the governance tools, how they vote, how the property ledgers work, how payment systems work, how the identity systems work, how the supply chain systems work, etc., and etc., are going to be updated. He says this is like a leapfrog effect. He says with that in mind, Cardano's foray into Africa is somewhat of a genius move. No doubt the coming weeks and months will reveal the extent of the brilliance. Guys, I thought this was pretty insane and really gives a good idea as to, why are they building and why are they allocating so much time and resources to building in Africa. And honestly, when you read something like this, it makes a lot of sense. It made a lot of sense to me, so I hope that also kind of helps you guys who are maybe trying to make sense of it all, or just trying to research more on the Cardano project. Today, the markets are overall green regarding the 24-hour and the 7-day. We are dropped on most of these coins, just fractions of a percent. On the 1 hour, our fear and greed index is sitting in greed today at 73. And with that said, guys, that is today's video. If you enjoyed it, then tap the like. It helps a ton to help me grow this channel. If you like daily cryptocurrency videos where we go over Bitcoin, altcoins, and everything that is going on inside of the crypto space, you're trying to stay up to date with all the things that are going on here, then make sure you subscribe and hit the bell so you're notified every single time I publish a video like this. Keep in mind, nothing we cover here is financial advice. I'm not a financial advisor. I am just documenting the daily crypto news and this crypto bull run. Also, remember to check out my clips channel. If you like short to the point videos on specific cryptocurrency topics, this channel will be perfect for you. And again, we're trying to get this to 1,000 subscribers. And I thank you guys immensely for already getting me to 250 and all the support that you guys have shown, the likes, the comments, the shares. It really means a lot. And with that said, guys, I will see you all on the next one. I'm really excited to see what happens in these markets tomorrow. Have a great day, everybody.